Hello, welcome to our latest episode of Selling Sussex. Today I am joined by Seb, who is a financial planner at Pembroke Financial Services. Welcome, Seb.
Hiya.
So do you want to start off by telling us a little bit about yourself and what you do?
What do I do? So, as you say, I'm a financial planner at Pembroke. We are a Sussex-based wealth management company. We also have in-house investments, but essentially my job is to look after people's money, prepare them for the future so they can build wealth, and then at the point they want to decumulate and start spending money in retirement, helping them plan that, and then also helping them with any inheritance tax problems, which is the big buzz at the moment, so especially around property.
And I often come across a lot of sellers who are looking to downsize, not only because the house has got too big, kids have moved out, etc., but also to release capital. Do you have any advice on what they should be doing in that situation?
So in that situation, of course, I would say this, it's imperative you take advice, because if you're looking to release capital from property, it's usually large amounts and you're looking to replace income or create income. For us, that is bread and butter. That's exactly the kind of stuff that we look at, is putting you in investment portfolios that are going to give you enough income, looking at how to structure the income for you more tax efficiently, and basically set you up. You're obviously, if you've downsizing, you've done well, or at least purchased property well, and that is what we would say is an old-fashioned pension pot. So you need that then to pay for your retirement fund.
That's great. And when it comes to buying and selling property, other than what you've just gone over, what role does financial planning play?
Mostly if you're purchasing property, we're looking at where we can release money to our clients effectively and tax efficiently, which isn't going to affect their long-term savings. Yeah. That's really our role. That's your world, is when they're buying. So for us, it's very much we create plans around what our clients want to do, and if they're purchasing property, it's just making sure that they have funds available, and also what it looks like long term and how it's going to impact what their whole plan is.
Great. And how do you help clients balance between having funds for buying property and other financial goals like retirement or investing? How do you differentiate where their funds go?
So this is all about how long you need to invest for, so investment timing. So for us, if a client comes to us and says, I'm looking to purchase a property, we would need to keep something liquid, so cash, lower risk investments, things that are not going to be affected too much by the stock market. In terms of how that fits into their whole scenario, it just depends on where they want to buy, how old they are, what other capital they have. Obviously for us, we have products which you can't take money out of before you reach certain ages. So things like pensions, bonds, there are things which are inefficient tax-wise to take money out of, or you cannot take money out of. So we would focus on those things. So if you need money to purchase a house, you'd have things like ISAs, general investment accounts, where we would say that's where you want to go to, earmark some of that for what you need. Unfortunately, it's now legislation, you have to save into a pension via work if you're employed. So you don't have to if you're self-employed, you should. So that's really how we balance that. We make sure that they're still getting enough into that long-term saving pot, as well as being able to use the money they've earned so far to buy the house they want.
So how do you deal with clients who are purchasing or selling luxury homes?
So the big thing from my side, obviously we have people that deal with mortgages, but that's not something that I deal with personally. The big thing that we would be looking at in terms of the financial planning is the implications of inheritance tax. So a lot of people will be aware of inheritance tax. They'll be aware that in the area that we live in, most properties will drag you into inheritance tax zone, if you want to call it that. So for the really top end luxury properties, if you have a total estate, so it's not just property, everything you own that is more than £2 million, for every £2 you're above that, you lose £1 of the property allowance. So how inheritance tax works is you have your basic rate band of 325,000 and then a property allowance of 175 on top. So as long as you leave your property to one of your children or grandchildren, you will get 500,000 as an individual. As a married couple or civil partners, you'll get £1 million. So in this area, certainly in the southeast, that is becoming a big issue. So pensions from April 27 will become part of your estate. So the planning around that is, a lot of people here will then be thinking, right, now I have to pay inheritance tax on something that I wasn't aware of. So that fits into the sale side of it. Then people are looking to downsize as they're getting older. So actually purchasing, not a huge issue until the second death. But then when people are downsizing, that's when we're looking at more tax efficient investment strategies so that we can release capital out of the property, not have to pay so much inheritance tax.
That's great. Well, thank you so much. That's some really useful tips and advice there. If you would like some more information about the services that Seb offers, all his details can be found at the bottom of this video. And thanks again for joining.
You're welcome.